It was manic Monday on Dalal Street. The Indian stock market faced one of its biggest falls since June 2024. The Sensex fell nearly 4,000 points, while the Nifty 50 slipped below 21,750, dragging down investor confidence. The fall was triggered by fears of a recession in the United States, sparked by a global trade war because of reciprocal tariffs by American President Donald Trump.
It's been a day of superlatives at the stock market. Biggest sell-off since COVID. Steepest weekly decline in years. Longest losing streak in over a year. As FIIs turned relentless sellers, even the DII retaining wall could not hold up. Nifty opened gap down, plunging up to 1,160 points of 5.1%. The BSE Sensex fell nearly 4,000 points before recovering later in trade. Investor wealth of a whopping 19 lakh crore rupees wiped out. All sectors were in the red, led by metal, which was down more than 8.5%. Media, IT, energy and public sector stocks were the other losers. While the root of the chaos is the massive burden of Trump tariff across the globe, other elements have added tadka to the mix. China rattled world market by retaliating with its own 34% tariffs. Beijing's stance that it will not fold under pressure has sparked concern of an all-out global trade war. The trade war is also expected to drive up inflation, shrink corporate profit and hit consumer sentiment. There could be a delay in rate cuts and in the worst case scenario, lead to global recession. Every major stock market around the world was deep in the red on Monday, especially after Trump's comment on bitter medicine.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
Meanwhile, in India, FPIs turned net sellers again in April after turning buyers in the cash segment last month. Till Friday, FPIs had sold off Indian equities worth 13,730 crore rupees. What has added to the concerns is the Nasdaq officially entering bear territory on Friday, falling more than 20% from its recent peak. The sell-off in the market has hit retail investors, but it has also wiped out a considerable fortune of India's richest. According to Forbes, Mukesh Ambani lost $3.2 billion, Gautam Adani $3.4 billion, Savitri Jindal $2.5 billion and Shiv Nadar $1.2 billion. Meanwhile, investors now have their sights on the RBI rate decision on Wednesday and the earnings season, which begins with TCS on Thursday. Bureau Report, BTTV.
Global financial markets continue to plummet amid fears of a trade war and economic downturn. After striking back at the United States, China has slammed Trump's economic bullying. Germany too has hit out at what it calls nonsense tariffs. Here's how the world is reacting.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
The world is getting a taste of Trump's bitter medicine, and he's showing no signs of reversing course. But there is some pushback. After striking back with a slew of countermeasures, including extra levies of 34% on all US goods, China is calling Trump's tariffs protectionist bullying.
The Chinese government has made its solemn position clear regarding the US abuse of tariffs. The United States, under various pretexts, has imposed tariffs on all its trading partners, including China, which severely infringes upon legitimate rights and interests of other countries, seriously violates the rules of the World Trade Organization, gravely undermines the rule-based multilateral trading system, and disrupts global economic order and stability. The Chinese government strongly condemns and firmly opposes such actions. The US approach is a typical act of unilateralism, protectionism, and economic bullying, which causes harm to others while backfiring on itself.
Europe has reacted with a mix of criticism, economic concern, and calls for unity within the European Union.
Stiamo governando nel momento probabilmente più difficile.
Of course, we did not agree with the choice of the United States, but we are ready to deploy all the instruments, negotiations and economic needed to support our businesses and the sectors that will be penalized.
Germany's economy minister was among the first European officials to voice strong criticism, labeling the US move as dangerous and counterproductive.
Insofern trifft die Argumentation, die Trump...
The argument that Trump uses as the basis for his decision simply does not apply. So we shouldn't get involved in this argument at all. And this is linked to the fact that talk of reciprocal tariffs, that is such countermeasures against advantages that Europe or the world has over the USA, is simply wrong. They are preventive measures. They are isolationist measures that he has taken with serious damage to the global economy. The stock markets are already collapsing and the damage could become even greater.
The US decision to raise tariffs against Europe and the rest of the world is extremely unfortunate, but the EU stands united right now. We're in favor of a negotiated solution, but of course stands ready for countermeasures that are well targeted.
Voices of discontent are also growing louder within the United States. Billionaire fund manager Bill Ackman, who endorsed Donald Trump's run for president, said the US leader was losing the confidence of business leaders and should pause his trade war. Elon Musk himself is pushing for zero tariff zone between US and EU.
I hope that the United States and Europe can establish a very close partnership. We obviously are, there's an alliance already, but I'm hopeful that there can be a very close relationship with America and Europe.
Goldman Sachs has raised the odds of a US recession to 45% from 35%. The second time it has increased its forecast in a week, amid a growing chorus of such predictions by investment banks due to an escalating trade war. At least 7 top investment banks have raised their recession risk forecasts, with JP Morgan putting the odds of a US and global recession at 60%. On fears that the tariffs will not only ignite US inflation, but also spark retaliatory measures from other countries. Bureau Report, India Today.
So what follows Manic Monday? Is the rout on the stock markets likely to get worse? Is this an opportunity for you to buy on the dip? How should investors really be looking at the bloodbath in the markets, and what can stop this contagion? What can now lead to a turnaround? To talk about this, I'm joined by 3 super sharp money managers. I want to introduce first Devina Mehra, founder and chairman and managing director at First Global. I have Samir Arora, founder and group CIO, fund manager at Helio Strategic Fund from Singapore. I have Radhika Gupta, managing director and chief executive at Edelweiss Mutual Fund. So thank you very much for taking out time. I'm glad at the end of this battering day, you're all still smiling, or at least trying to smile. So thank you. Appreciate your time. Devina, I want to start by asking you the most important question in the lens of people who are watching at this time. How bad is this contagion likely to go from here? Do you think the worst is now behind us, or are you anxious that the worst could still be in front of us?
Nobody knows where the exact bottom is. I heard somebody say that if the news remains not positive, how can markets do well? I said, at the beginning of 2020, I had told you that there's going to be a one-in-a-century pandemic that will kill over 7 million people. There will be a whole year where hotels, aviation, travel, automobile industries revenues will go to zero. Other industries also will take a big hit. How many of you would have predicted a bull run? So the markets are never that linear or simple. So my advice right now would be that whatever is your equity allocation, I never say that have 100% in equity. And if you are waiting on the sidelines, waiting for a correction, it is time to start getting in, which is not to say that there cannot be some downside, but I think the risk reward in terms of the percentage the markets can go up versus how much they can go down, the risk is in your favor, risk reward is in your favor. And also remember, everybody understands the risk of being invested in the markets, which is that you can lose some money, but there's also a risk to not being invested in the markets. So over the long term, since Sensex started 40 odd years, if you had missed out the 10 best days in the market, you would think 10 days, 40 years, it shouldn't matter much, but it takes away 2/3 of your returns. So if your 100 rupees had become 75,000, you miss out the 10 best days, you're down to 25,000. Miss out the 30 best days, you are down to 7,000. So that's how drastic it is. So I would advise remaining invested, but not necessarily where you are currently invested. So stocks down 50% can still be a sell. So you have to have broadly towards a large cap steady portfolio. So don't try to make it back in the same stocks or the same strategies like last year, last calendar year. A lot of people stopped large cap SIPs and put it into small cap SIPs. So never chase themes, but on a broad basis, remain invested.
Okay, Samir, I asked you this question a few weeks ago when we had a NewsTrack which then went viral, and you had indicated as clearly as you could that things could get worse, and they have. If I ask you the same question again, is this roughly where the bottom is, or are things likely to get worse from here? What's your sense today?
I think they are not likely to get much worse. The only thing is that this bad phase may continue, and more than India, it's all being driven by US. But I would think that if you see on Friday, when the US market fell a lot, initially the futures were not down a lot. They were down about 2%, and then suddenly the China news came, and then the futures went down 4%, and ultimately the market went down 6%. So I think if there's any other country protesting, and it doesn't seem to be, EU is not saying anything after saying on the first day that we will come out with reciprocal tariffs to the reciprocal tariffs on the same day at 11 p.m. EST, and we will be targeting services, US services, all that they seem to have backed off. The big 3-4 countries US has to do a deal with, and I think other than China, everybody else will come on the table. So I think the worst may be over, but because the uncertainty in US will remain high, because this won't get resolved in a few days, because they will have to show a process just to show that it was not just a random victory that has been claimed. So the process will take longer, but level-wise, you may be there. And India, by the way, you call it a bloodbath. Today, I'm sure every Indian investor was delighted with the fact that when every other Asian market was down 6 to 10, 12, 15% even, or something like that, India was down only around 3%. So not bad for today.
I just want to capture what Samir said, and especially compare with what he said on the last show. He was at that time indicating that things could get a lot worse. He's now suggesting that we are roughly close to how bad things could be, even though don't expect an upswing immediately. Radhika Gupta, from where you're at, your reading of the current state of the Indian markets in terms of whether you think we're close to the bottom, or do you think, given the uncertainty, it is impossible to say?
I would say this. I think the environment is extremely uncertain, and while things have cooled off quite a bit, I would agree that I don't see them immediately turning around, because there are twin factors. A lot of the noise has come because of global factors, and usually when you have markets like this, you can use valuations or triggers to call a bottom, but here you're rewriting the rules of international trade in some sense, and those are not going to be sorted out immediately. You've seen one set of retaliatory actions from China. You have to see how India goes back and negotiates. It's very hard. You have to see what stance the Fed takes on rates. So I think some of this will take time to sort out. The second part is that if you look at the last 6 quarters in India, earnings have also slowed down in India. And you're going to start to see an earnings season kick off in India from 9th of April, which is when the first IT companies, which have been in the brunt of this, also start to report. So you have to see the impact of earnings. Finally, India needs global stability, some renegotiation of those tariffs, which I will hope we do, but also an earnings kickback. So I think it will take time for this to come back. So if people are looking to invest, they can invest in equities, but not with the hope of an immediate rebound, which is actually what we saw 5 years ago with COVID.
Okay, so here's what I want to focus on in the next part of the show. Can Trump turn it around? Because we've seen in his last term, Samir, that Donald Trump really cares about how the markets are performing, and in some ways he sees that as being indicative of how his government and his presidency is going. This time, though, he's suggesting he doesn't care as much and that some short-term pain is required for long-term gain. But this is bloodbath, and especially in the US markets too, as the situation continues to slip. Do you think Donald Trump, if he changes his mind or pulls back the tariffs a couple of notches, will that stop the bleeding, or are we now in a cycle which has a life of its own and America is heading into recession? As it does, it is likely to continue to bring global growth down?
So first thing is, I don't think he will change easily. If you see his old videos, there was an article in Wall Street Journal yesterday, and which is otherwise you can see those videos on YouTube, etc. In 87 and in 88 and in 2000, he's been saying the same things, that Korea and Japan are taking advantage of us and all that. And he has put too much skin in the game on this, so he cannot back off because there'll be no other chance. If he delays it by 2-3 months, it cannot bring any relief other than maybe a 2-day relief, because that uncertainty would just get pushed forward. But recession per se is not such a bad thing. Every recession is not like the global recession of 2008. By the way, in 2008 also, there were many attempts at the market sort of bottoming out, but every time one new bank, one new broker would go bankrupt. That's what I'm saying. These things can end if there is no further bad news. So if another country does not protest, and it doesn't look like any other country is protesting, if they have to do a deal with Europe and a deal with Vietnam and a deal with Japan and India broadly, and all have already accepted. And then if there's no further bad news, then it's only a matter of, okay, how much US uncertainty will be there, which you might repair some confidence in 3-4 months. So every recession, recessions happen all the time. Bad recessions, which are of the kind of 2008, actually, if one day before Lehman Brothers went bankrupt, if Barclays had bought it, the last 30% would have been avoided. So 60%, 50% falls are not normal. They've fallen 20%. They can fall another 5-7%. And India seems to be in a better spot simply because we have no exports to worry about, no imports to worry about. Our scale is too low to worry about all these things beyond a point.
Sure. Siddharth Ravi, how are people in government looking at this rout in the markets? Because this is of massive concern. The story that's been trending much more than anything else. Politics doesn't matter quite as much at this moment as the bloodbath in the markets.
Well, you hear mixed views, including at such times saying that the government can't do much about the markets. When they're on an upside, people don't come and congratulate us. But, the broader issue really is how long can this continue? And I would say that a lot will depend, at least in terms of expectations, and this is the point that you touched upon. Will President Trump take pause? I've been in touch with people in the US, and the man behind these, Peter Navarro, he's an absolute hardliner, and he has gone on record on television in the US to say nothing doing. Now, is he speaking for the president? We don't know. Elon Musk and him have also sparred, but at the centrality of this, and this is a message which I got practically like an hour back, that 50 different conversations are happening currently in the United States with different countries. And therefore, what will come of it, even the time that will take out for the results to come out, is going to be significant. So, key date to watch out for, Rahul, is April 9. That's when the bulk of these tariffs come into effect. If he takes pause, there will be some semblance. But is the Trump effect on the stock markets and that initial bonhomie, will that come back? I don't think so. Trust has been broken very, very significantly.
Let's spend a moment on this, because there's so many research reports which are suggesting that the probability of America slipping into recession is more than doubled from before the announcement of these tariffs. And if that becomes almost inevitable, what impact, in your view, does that then have on global growth, and as a consequence of that, on Indian sentiment?
Okay, first of all, let me tell you that in markets, let me come from the market side, no theme runs forever. So no country, no asset class, no sector. And US markets have been an outperformer for fairly long, I think about a dozen years or so. And I had been watching for a while that at some point this outperformance will end. And I think all that Trump has done has hastened the end of that outperformance. Like in our global funds and portfolios, even in the January rebalance, we went somewhat underweight US, increased Europe, increased fixed income. But I think he's doing something when there was no problem to fix. US was at near record low unemployment. So what were you trying to fix in any government policy, whether it's a tax cut or any incentive or demonetization that we did? You have to look at what are you trying to achieve. And here I don't see what he was trying to achieve, because there is nothing that was to be fixed. The labor market was pretty buoyant as it is. And now by doing this, you have unnecessarily given a body blow to the American economy. So inflation expectations in the US for the medium term for about 5 years was already close to 4% in the middle of March. I'm sure this time the print will be even higher. So you are getting into a situation where inflation expectations are soaring, which makes difficult for the Fed to cut rates, and then you are putting the brakes on growth, which are not good things. I mean, I was looking at Fareed Zakaria's talk, and he was talking about that how in 30 years ago, or rather in 1990, the EU and US were almost the same size, and today US is about 80% larger. So you didn't have a problem, and you are creating a problem. And yes, I mean, I agree with Samir that our external exposure is limited, and if India really wants to just close the trade deficit, it can start importing oil from the US. I mean, US is the largest producer of oil in the world, after all, of crude in the world. So I mean, our problems are not so external. And also remember, just the US not doing well, let us say the market, doesn't mean the whole world doesn't do well. Let's look at 2003 to 2007. The US was already in the doldrums post the tech crash. It still did not perform well. I think for the entire 4 or 5 years, the return was 65%. And in that same period, the emerging market index went up 3.5, 4 times. India went up 6 times. Brazil went up 10 times. So the markets can go in different directions, as I said.
So let's spend some time on that.
Maybe just the end of the US theme, not the global theme.
That's a very important point you make, that this could be the end of the era of American exceptionalism, but it could potentially throw up opportunities for emerging markets like India. Radhika Gupta, from your lens, how is India poised at this moment in terms of its valuations and attractiveness when it comes to getting foreign portfolio investment excited about the India story? Because earlier, given the high price earnings multiples, we were largely seeing FPI money moving out. Now, and they were going largely to American tech stocks. That exceptionalism now stands completely busted. So could that lead to American money which had moved out, or global money which had moved out of India, now coming back to India in a big way?
So I think yes, and here are my 3 reasons that this looks a little bit better for India. One is Indian valuations have moderated. Look, at some point we were 35 to 40 times on the mid-cap and small-cap indices, not cheap on the large-cap index. A 20%, 25% correction in mid and small caps and some in large caps at least means that valuations have moderated meaningfully. The second is, many folks have said, is that relative to other parts of the world, including China, where capital flows had started, we look relatively better from a tariff point of view relative to Europe, relative to China. And if he doesn't touch IT and pharma, I think pharma, the verdict is yet to be out, then we could probably escape. The third, which is a very interesting one, because we get capital from around the world again, is that one of the biggest sources of capital, institutional capital, was private credit in the US. US interest rates were at 5%, US equities had done well. You know, credit is going to come off in the US. US yields have already come down a little bit structurally, and equities, you know, look like they're having a tough run. So the FPI capital that India was lacking behind on perhaps might reevaluate emerging markets and reevaluate India. So we look more attractive relative to the US and perhaps a little more attractive relative to the rest of the world. Of course, for this, our domestic story needs to be intact, earnings need to grow, all that needs to happen. But there is a potential silver lining in all of this.
Samir, let's spend some time getting your thoughts on this. The way you think foreign portfolio investors are looking at India now, because ultimately they can't sit on massive cash reserves, right? They also have to go and invest. Do you think they're likely to come to India in a big way?
So yeah, actually FPI can come simply because if you see in a US weightage in the MSCI world is something like 70%, and which in the past has been around 50-55% if you look at it, say 10-15 years ago, whereas the GDP is only some 25%. So it doesn't, the weight will not be 25, it will be 50-55 because, bigger companies and multinationals and they have a full free float and all that. But 70% is a bit high, and there was some point somewhere when would have been too high. You could have said it last year maybe at 67%, that why US weightage in the world is 70. But at some point you need a trigger, as Devina was saying, so maybe this is the trigger. But the beauty is that if you only reduce it by 3-5%, the US exposure, then for the rest of the world and for China and India, which may be at 1 and 1.5%, the impact can be very high. But I now have a fear about FDI flows, because you tell me that every company in the world will have to first evaluate, are they going to invest in India, or are they supposed to now think of investing in US because they have an active there and wherever they are. So actually that will slow down on the other hand. And for that, the government will have to run around more. FPI, I think, is always easier to get if you change a few things. FDI is, much longer. It might be good, but it's not easy to get, and more work has to be done. And now every company more or less will have to evaluate whether they should put their new money in India or somewhere else, or in US, because there you have to beat the tariff.
No, see, that's a very important point that Samir makes, because the government has been trying to build Atmanirbhar Bharat, and therefore encourage, for example, Indian automobile companies to enhance manufacturing, and suddenly you're under pressure to reduce customs duties because Tesla wants to come in, other EV manufacturers want to come in at a lower duty structure. Secondly, as companies evaluate whether they want to move out of China and to what extent, they're now under pressure. Pehle idhar aao, pehle America mein invest karo, India baad mein dekenge. So how is the government, in all the people that you're speaking to, trying to deal with all that they built over the last 11 years now being upended by what Trump is trying to do?
Two parts to your question. The first is Make in India. This is the third term. Very clearly, Make in India as a slogan and actual practical reality in terms of government's trade policy has now come under a big question. We will see that being tweaked. But it's not because of the United States. The realization that we need to now look ahead in a different way is already visible to us. That is why we have more than half a dozen active trade negotiations. And this after 10 years of where we actually didn't want any negotiations. The United Kingdom deal should have been done by now.
Many Diwalis ago.
It's been delayed, but clearly there is a sense of urgency, and that's why that is the first response from the government to this evolving situation. These tariffs have come at the end of a process. The second part, how does India deal with a tariff-led recession? A tariff-led recession is fundamentally different from what happened at COVID or 2008, and experts here will perhaps agree, because here all the terms of trade, Rahul, in which you were exporting an $800 billion worth of exports is a significant number. So what can you do internally to boost consumption? So the theme that the budget spoke about, Rahul, deregulation, boosting domestic consumption, and look at the furor that has erupted after that remark on startups, where startups have gone on Twitter and are saying, free us to do entrepreneurship. That's what will help us come out
Sure, but that's much easier said than done, because the Prime Minister has been saying the government has no business being in business for a long time. Now they actually need to walk that talk. Just talking that talk
is the bureaucracy that really needs to walk.
Ultimately, you need to get the job done. In every crisis, there is an opportunity. I want to spend some time with Radhika Gupta first on the opportunities that you see at this moment. You did suggest initially that don't get stuck with too many small caps, mid caps. Sectorally, and in terms of the crisis that presents itself, what are the opportunities you're seeing right now? Radhika?
I think in the environment that's going to be the next 1 year, if you're asking me to build a portfolio, my theme is going to be very, very middle path, because I don't see the environment of uncertainty going away. So from a portfolio point of view, that means having a blend of risk and risk-off assets. I think precious metals tend to do extremely well in this period. So some component of gold and fixed income, which were forgotten asset classes in the last 3 years, should come back into the portfolio, although I've always said that they should be perennial. I think from a cap point of view, you have to be more flexi and multi-cap in nature. Just overloading yourself on small and mid caps, they will see bouts of volatility, and we've seen that. That said, you can't be at the extreme end because you can't be only large cap biased. Large cap has a lot of IT. So I think a flexi or multi-cap approach. And I think the third thing I would really caution investors is what happens and what's happened in the last 3-4 years is people have thrown valuation out the window. So they've bought defense stocks at 100 multiples and lots of things at 150 and 200 multiples. And that's okay in a growth environment. It's not okay in a potential slowdown environment. So I think the laws of financial gravity now have to find your way back into the portfolio.
It's very interesting that you say that, because whether it's a startup or a company that's listed in the public markets, the laws of financial gravity always come back to bite, and just when everybody's getting carried away, they tend to forget that. Devina Mehra, what are the opportunities you see in this crisis?
It's not very clear what the opportunities will be. I mean, I can tell you where we are overweight on our PMS currently, which has been pharma, auto components, IT, and in the last few rebalances, we've added a few FMCG and all that.
No, but wouldn't IT be very badly hit, given the fact that a lot of these exports happen to the United States? The IT behemoths, the bellwethers, are likely to be most impacted according to most research reports.
But I mean, there is both sides to it. I mean, the IT services management have looked at and lived through many kind of disruptions from Y2K to 2008 to going to cloud, going to digital. And there's always an argument also to be made, which the NASSCOM does make, is that if you look at previous periods of demand issues in the US, the companies look even harder to outside IT services to bring down costs further. So, I mean, that is one way of looking at it. I mean, they do support it with data in all the previous times US has had a demand slowdown or recession. So that part one can look at, of course.
So I want to reframe the question so we can get a more precise answer. Forget what you've already bought. I'm saying if you were building now for those who took out some cash and are now saying, okay, is this an opportunity to come in? What sectorally are Devina Mehra's recommendations?
So, I mean, as I said, we are in the middle of a rebalance, so I wouldn't like to preempt, because I also don't know exactly what would come out of that. Things which we are looking at little closer is banks, where we are usually very heavily underweight. So we added some in January underweight. So we are just looking at whether to add something there. As I said, in the last couple of rebalances, some FMCG names have come back in. So those are the things we are looking at. I always say on more important what to avoid. And usually, of course, now it's not, anyway, you will not see those kind of new fund offerings coming. But usually, I always say, if you want to know where there is froth in the market, look at where the thematic funds are clustered. Because typically they all come at the peak of that theme, whether it was NASDAQ in 2021, whether it was defense last year or small cap and all that. So be careful there. And if you're still holding some things where things look frothy, get out and get into a better portfolio. That is always what I say, that you don't have to hold on to the same thing. You do not have to make it back in the same stock. The market has no interest at what level you bought a stock. So if it's down 40%, it may still be a sell.
Interesting. So don't put any emotion behind the companies that you've invested in. Samir, the opportunities that you see and the pitfalls you think everyone listening to you needs to avoid?
So first, opportunities for the government of India to now do some reforms and open sectors which had very high tariffs, and do deals with China, maybe, because you'll have to do some things which are as a counter to US, size and
no, but there's no real conversation of any very big deal with China. Maybe some minor approvals.
I know. I'm saying they should. These are an opportunity to do, because if you don't use the opportunity, bad luck. But in our case, as a fund,
but how is that beneficial to India? They could inundate us with cheap imports, ruin our trade balance even further. How does that help us?
No. You can ask for for say BYD, bring them into India, make them invest in India, give them an export commitment, give them a localization.
No, so they wanted to come with mega engineering and the permissions never came through.
I know. That's what I'm saying. What is the point of us being 20? If you saw yesterday, there was an article in Financial Times that literally every day there is a launch of a new EV car in China, and there are some 58 companies.
No. So let me press you on this, Samir, because if that happens, let's assume BYD comes into India with cheap imports, right? Or even if they start manufacturing in India, what then happens to Tata Motors? What happens to, say, Mahindra? They will, like European manufacturing is being hollowed out. So the same will happen in India as well. So how is that net beneficial to us?
The Tatas are in more than 100 or 50 sectors. So you can't say that what will happen to Tatas. They are big enough to look after themselves because they are in every sector.
No, I'm trying to understand why is that forget one corporate group. I'm saying why is that beneficial to India?
It is beneficial to India because once you bring these companies in and you have 50 Indian guys working there, after 5 years, the local auto culture in auto ecosystem for even EV cars will develop. Otherwise, you're going to be 10, 15 years behind in areas where there is no strategic angle. So the angle is only to save literally one company, because all other companies are anyway foreign companies. You don't have to protect Maruti from anybody, and you don't have to protect, say, a local Hyundai from anybody. You're basically protecting 2 Indian companies, and in return for that, you're going to be 15 years behind. What is the point? If it is some strategic thing, some defense thing, you can do it. What is the point of restricting solar, where all you are doing is giving randomly high protection, and then the consumer of that solar panel is also an Indian company, an Indian utility? For what purpose?
No, I'm a little surprised that you're recommending it, given the defense and strategic competition India has with China. So I can see the benefit to the consumer. I mean, a BYD car will be cheaper, but they were on the line of actual control, eyeball to eyeball with us from 2020 for 5 years. I mean, how can we just forget that? Because at this opportunity, it makes sense.
The point is that today, if you otherwise keep depending on US for everything and accept everything, what I'm saying is you now need to have other blocks. And for EV and for solar, there is no better technology available. You can't buy it. So the only way you can indirectly buying it is by letting them in. And for example, I don't know exactly, but you could say that you can't have more than 10 or I don't know, X number of Chinese at the top, so the rest have to be Indian. So it'll come through various ways. There'll be supplies in India, there'll be targets in India, there'll be export target, localization target, investment target. Beyond that, how does it matter who owns it? How does it matter literally if one Indian fellow who's an NRI now and sitting in Dubai or London owns this company? How does it matter beyond a point, except that he's an Indian citizen?
Okay. No, so
and here also you'll have a local partner. You could say 70-60% foreigner, that is BYD or whoever, 30-40% some Indian partner who will be Indian. So these things are, I mean, one guy's dividend is changing. Is Maruti an Indian company or a Japanese company? Who knows? It's an Indian company as far as the system is concerned, but technically it can get some dividend out. I don't think these are...
So see that the problem in the way that Trump has acted is that now India and countries like India can't trust a supposed friend like the United States, because the friend could kill you in the chin at any time. And you don't know whether you can trust China because of and you're a Fauji Bacha yourself, because of the military angle there. So it's a really tough position to be in a geostrategic sense.
The single biggest challenge for our diplomacy and trade policy, which go hand in hand at this point of time, is to not be seen playing America vis-a-vis Russia or China. You cannot be non-aligned to the extent that if you see and go through the fine print of this tariff action, China, mainland China has been targeted, and every single country which is a proxy for it, including those in East Asia, have been targeted. So the bulk of the US action is against China and its proxies. Rahul, you know this subject equally well. It makes sense for us for the long term to be aligned with the United States. We have demonstrated flexibility and independence when it came to getting Russian oil, as long as it suited our interests. Therefore, I would say that the China question cannot be looked at only from one particular perspective. National security will continue to outweigh every other commercial consideration.
So we got derailed by the strategic dimension of your China recommendation, but let's come back to the rest of the opportunities that you're seeing. Samir.
So I was saying, in a big picture sense, large caps are good, but the problem is that in large caps, other than financials, the rest of the things are not attractive. For example, IT, we have been near zero for the last many months. Consumer, the large consumer companies, staple companies are basically grow 2-3%. And the consumer discretionary, you saw today, companies like Trent going down 15%. So there's no real growth relative to expectations. So the only thing left in a large cap is, and auto nobody likes because auto is the one being disrupted and subject to tariff threats. And I mean, in our case, lowering of tariff issues. So large cap basically becomes financial mostly, and that we like. And then the rest has to be across market caps. So I agree that it should be broadly a flexi cap kind of an angle rather than large cap kind of an angle.
So before I wrap up, and just out of curiosity, you don't have to answer it, what percentage of cash are you sitting on, Radhika? Can we start with you? Of your own personal investment, forget what you're handling for those watching, but of your own investments, what percentage of cash are you sitting on? Ki dekhte aage kya hota hai?
Very little, about 90-95% equities. I'm a long-term believer, and the funds don't take cash calls. So both me and the funds are reasonably well invested, but in sensible things, flexi cap in nature.
Devina?
Not in cash. So, I mean, the way we play it is that when there is uncertainty, we hedge rather than go into cash most of the time. It's very rare that we actually move to cash.
Samir?
So I don't invest personally, but I'm the large investor in my fund. So in our global fund, where we sold off everything in US, we are 65% cash. And in our long short fund, we are 50% net. And in our long only funds, we have about 8% cash.
Okay, so track where they spend
long
that
only
cash.
India funds.
Track where they're putting that cash. That might give you some clues, but interesting conversation. And I think we've been able to get three different perspectives. So I thank my guests. It's very tough to get all three together. So Devina Mehra, Radhika Gupta, Samir Arora. I'm glad that you're still smiling. I know it's looking like a little bit of a forced smile, but at least you're still smiling and not forced.
Not forced. Why should it be forced? We have also seen through 8 and 18 and 20 and whatever else. And I've seen
but the big difference is that there's a post-COVID generation as well. The younger producers in our newsroom, for example, who haven't seen this. They're looking as if, oh my God, what just happened? Like their ship just hit the iceberg.
They'll get some more gray.
No, it's not that bad. It's not that bad. It's okay bad, but not bad.
Yeah.
When you got as much gray hair as Samir does, you can say it's okay bad. It's okay bad. It's not that bad. But yeah, it's the reality, and that's the reality. And financial gravity, the laws of financial gravity are coming back to tell us that they're still around.
Bad is a bank blowing up. No bank is blown up yet.
Correct.
This too shall pass. Rahul, never forget. This too shall pass.
This too shall pass. Thank you. Devina Mehra, Radhika Gupta, Samir Arora. Thank you very much for joining us. The Waqf Amendment Bill may have cleared the Parliament, but a big legal fight looms. At least 12 petitions have been filed in the Supreme Court. The pleas are seeking the top court's intervention against the Act. Here's more.
पक्ष में 288, विपक्ष में 232, प्रस्ताव स्वीकृत हुआ और विधेयक यथा संशोधित पारित हुआ.
The contentious Waqf Amendment law is now at the door of the Supreme Court. From the Congress and the Aam Aadmi Party to the Muslim League and the banned PFI's political arm, the SDPI, there are at least 11 petitions in the top court against the Waqf Act.
जिसको समझ में नहीं आया वो नाराज है, जिसको अच्छा से समझ आ जाएगा कि हमने वक़्फ अमेंडमेंट बिल में क्या प्रावधान किया है, राजनीति को छोड़ के अच्छा से सोचेंगे तो गरीबों के लिए, मुसलमानों में महिलाओं के लिए, जो बैकवर्ड कम्युनिटीज़ है, बच्चों के लिए, सबके लिए है. आपको पता चलेगा अगले 2-3 साल के अंदर में इसका फ़ायदा बहुत ज़्यादा होने वाला है.
The act rocked the Jammu and Kashmir Assembly. Ruling party MLAs moved an adjournment motion against the recently passed law. In protest against the motion's rejection by the Speaker, National Conference MLAs tore copies of the bill and some their own clothes. While both the BJP and the National Conference leaders stormed the well of the House sloganeering,
Not everybody is happy with the Waqf Amendment Bill. It is a direct attack on the religious minorities, or the minorities of this country, and we feel we have all the right to speak, and this is an august house.
Union Territory, Jammu Kashmir, इसकी assembly वक़्फ़ बिल को डिस्कस करेगी। मतलब कितनी शर्म की बात है, संसद के कानून को आप नहीं मानते हो, आप किसको मानोगे?
PDP Chief Mehbooba Mufti alleged a BJP-NC collusion over the Waqf Act.
आज वो हाथ में हाथ डाले उस मिनिस्टर के साथ घूम रहे हैं जिसने वक्फ का ये जो काला कानून जो लाया, जिससे हमारे कब्रिस्तान पे भी हमारा हक खत्म हो गया। जिंदगी तो बर्बाद कर दी इन्होंने, मगर हमारे कब्रिस्तान तक हमसे छीनना चाहते हैं।
3 दिन पहले बिल पास की है, प्रेसिडेंट रिजू साहब ने की है, यहाँ अंदर ये प्रोटेस्ट कर रहे हैं, वहाँ फारूक साहब और वो उनके साथ मॉर्निंग वॉक के लिए जा रहे हैं। ये तो ड्रामाबाजी बनती है। इट शुड नॉट बी डन।
The fallout continues. 300 anti-Waqf protesters are facing police action in Muzaffarnagar.
गलत मैसेज देना, लोगों को भड़काना, लोगों को गुमराह करना, ये भारत के कानून में है। आप गलत दिशा आप सही करिए, बहस करिए सदन में, उसके लिए आप बैठाइए कि कौन सी चीज गलत है, कहाँ गलत हो रहा है।
A BJP's Muslim leader home in Manipur was torched by an angry mob for supporting the Waqf Act. The new law for the management of Waqf property has the country clearly on the edge. Bureau Report, India Today.
This is where I wrap up the NewsTrack tonight. For your time and your trust, thank you very much. I look forward to seeing you at 8 p.m. tomorrow evening. Till then, from all of us here, bye, good night.